Zimbabwe cash crisis
We're
worse.
talking about Venezuela once again.
Systemic important banks. They removed the one factor in doing this thing right here called monetary Hey there, hope all is well. Back here today with some more RTD News updates. And as you can tell from today's title, we're going to be talking about some recent announcements from the CBO, or the Congressional Budget Office, in regards to the fiscal outlook of the United States of America now and in the future. And one of their own spokesmen mentioned how, based upon where we're at now and where things are heading, it's very likely that we will have some type of debt implosion in the very near future. And so what I want to do today is cover a couple articles and then share my thoughts at the very end on how I've always mentioned in the past that when monetary and fiscal policy collide or are not in agreement, there's going to be problems. And so beyond the fact that we have the Federal Reserve, which is a separate entity controlling our money supply, they're in the process of quantitative tightening as well as trying to raise interest rates in an environment where it's very questionable. But then on the other end, when it comes to fiscal policy, the United States government is trying to basically cut taxes for the middle class, as well as continue the entitlement program spending of Social Security, Medicaid, and Medicare, of which the budget for that will continue to increase. So there we have two different variations of policies, which at the end of the day will come back to hurt us all, because there's no way that they can align those policies up to be beneficial for the public, especially because we're in an environment where everyone is indebted as well as our government. So before I dive into those articles, as always, if you're new to RTD, I want to encourage you to click the subscribe button along with the notification tab to be informed of future updates as well as live streams. Also join me on Twitter, where I share posts throughout the day on various subject matters dealing with our monetary system as well as whatever's happening in the news that I can't get to via video. Make sure you click the button down below to be notified when things are posted. So as I mentioned, I had about 4 or 5 articles which all kind of tie into the same subject matter of just some thoughts from the CBO in regards to our fiscal policy and the debt and some of the thoughts from different people. But one of the things that's most worthy of taking note of is the fact that here we are in a position where monetary policy has been very controversial over the last 10 years due to the fact that the Federal Reserve has implemented monetary policy, or unprecedented monetary policy, like the world has never seen before, with just the concept of quantitative easing. So now they're in an environment where they're looking to do quantitative tightening. So you factor all that in just on the monetary and central bank side of things. Then we talk about what's happening within our own government and how there's so much disarray in Washington, D.C. in of itself, not to mention all the things happening in the news in regards to pensions as well as just the overall markets and whatnot. So here we have some information in regards to our debt. And so most people don't really take into consideration how serious of a debt problem we're in, since we are the most indebted nation ever in existence. Not only do we have all the public debt, we also have the private debt, which is becoming a problem. So when you see articles like this, it's definitely things worth taking a note of, just because we have the actual bookkeepers for our government, which is the CBO, coming out saying that there's going to be problems in the days ahead. And then you know that when they give you estimations on time frames in regards to saying 10, 20 years down the line, that lets me know that it's probably a lot closer than what we are being told. So what I'll do is thumb through some of these articles here, but more importantly, take time, scroll down below, read them for yourself. So the very first article here talks about the U.S. debt bomb. It says CBO predicts dangerous national debt spike. Scroll down some more. It says the U.S. federal government's debt is on course to reach its highest level ever compared to the overall economy, according to the CBO office. It says the CBO predicts that in 10 years, the national debt will reach nearly 100% of the gross domestic product. So there, it says 10 years. Cut that in half, say 5 or less, in my opinion. It says, in other words, the debt will be as big as the total annual output of the entire economy. It says by 2040, the debt will amount to more than 150%. Right. Once again, cut that in half. It says some economists worry that such a high debt level could be a drag on the economic growth. Quote, the prospect of large and growing debt poses substantial risk for the nation and presents policymakers with significant challenges, CBO Director Keith Hall said in a statement. So to go back there, the idea that the debt poses substantial risk right there should let you know how serious of a matter this really is when you have one of the CBO directors coming out saying that substantial risk. Scroll down a little bit more. Saying, however, the agency predicts that should the current tax and spending policies be extended, the GOP lawmakers are hoping to do, the fiscal situation could grow more dismal. So here we have the idea of the current tax cut, which is already proven to put our country in more of a deficit state, because they're going to have to borrow more because revenues will be down. And then you have the idea that spending will not change. There is no way that they will cut any form of entitlement. So there you have two problems right there. We have less tax revenue and more entitlement spending. So there's going to be a problem in and of itself. So if you're interested, feel free to read more for yourself. Next article here is very interesting. It says U.S. debt forecast to keep piling up, passing 1946 high. It says government debt is on track to hit historically high levels, and at its current growth rate will by 2028 be nearly equal to the size of the U.S. economy. Once again, cut that in half. The debt is projected to grow to 96% of the GDP produced by 2028. It says currently the federal government debt burden is about $15 trillion, according to Mark Goldwyn, Senior Vice President of the Committee for Responsible Federal Budget. Says a 1946 high was prompted by a spending push to fund World War II, and other spikes in the debt have been driven by economic downturn. So there was a spike in debt for the purpose of war. Here we're supposed to be in an economic expansion, and our debt is through the roof. But other than that, you get the idea where this is heading. Next article here, it says CBO, ballooning national debt could hurt U.S. economy, increased likelihood of a crisis. So here we have the idea of this debt becoming a crisis. So this is clearly a national risk that more people should really be paying attention to.
It's the next recession.
Recession will be.
Will be a recession.
We're going to hit a recession.
The date of the next recession.
A U.S.-only recession typically lasts 8 to 10 months, but a lot of things about this particular one have not been typical. So
A crash is coming now, whether it's 6 months from now, 12 months, 36 months, no one knows.
I go to bed every night, I dream of another recession. If you know what to do, if you have the right plan to set up, you can make a lot of money from this.
Scroll down some more, give you an idea what's going on here. Pick up at the bottom. It says economists are split over how concerning long-term debt projections should be for policymakers and how best to resolve them. It says, quote, large and growing federal debt over the coming decades would hurt the economy and constrain future budget policy, the report reads. The amount of debt that is projected under the extended baseline will reduce national saving and income in the long term. So basically on the current track we're on, they foresee a reduce in national savings, which means you and I will not be able to save as much because costs will go up and the entire financial environment we're in will become more expensive, which will then play into a lack of income in the long term. It says increased in government interest costs, putting more pressure on the rest of the budget. It says limit lawmakers' ability to respond to unforeseen events and increase the likelihood of a fiscal crisis. So here we have the idea, likelihood of a fiscal crisis. So hence the idea that because of too much debt, the government will have very little wiggle room to be able to really borrow and do what they typically do when crises arrive. So that puts us in a very uncomfortable position of which a lot of those entitlement spendings as well as overall confidence and faith in the dollar will be brought into question when the next crisis arrives. So more information there if you feel like reading it. So that leads to the idea that quantitative tightening is roiling markets. So because the Federal Reserve is looking to begin tightening up its very loose policies, that's going to cause a major problem in regards to our bond market as well as stock markets, because it's going to impact all nations that have borrowed dollars over the last 10 plus years as rates rise. It's going to make it very difficult for a lot of those nations to repay those debts if their national currency is not retaining its purchasing power, which will mean it will put more of a debt burden on those countries, which will come back to hurt all markets around the world, in my opinion. And for those that may not have an understanding of what quantitative tightening is, here's a great article down below where you can read that came out last year. Some thoughts that originate from Jim Rickards, of which this gentleman here put them together in a very concise manner that people can understand. And so what I want to actually hint on is the fact that this is very important information more people need to pay attention to, because as I mentioned before, monetary and fiscal policy are on two different spectrums when it comes to the policies implemented, because we have an independent entity in the Federal Reserve that's independent of our government, able to make decisions in the best interest of the banks first. Then we have our government, which makes fiscal policy, and they are the ones that have been elected by the people to represent the overall body of our nation. And so when we have the idea that two separate entities are on different pages looking to achieve the same goal, supposedly, of stabilizing and keeping the dollar as well as keeping our economy and our finances of this country on sound ground, it lets me know that when I hear reports such as these, when the CBO director comes out and says that we're on an unsustainable course, lets me know that things are probably a lot worse off than we are really being told. And so this is a very interesting time that we're in, because never before have two different entities been in two totally different worlds trying to accomplish the same thing. And in the middle, you have you and I, the viewers, the public, the citizens that are dependent upon this monetary system to continue to work, because our livelihoods are tied into it, because the dollar, the Federal Reserve note, is the very lifeline of this economy as well as the global economy, because everyone's holding on to Federal Reserve notes. So in the days ahead, as debt continues to spike, the implementation of different policies continue to be suspect, then we're going to have problems, because that will then erode complete confidence and faith in our national currency, which is a dollar, which so happens to be the current reserve currency of the world. So definitely, I would love to hear your thoughts on the subject matter. Leave a comment down below, and more importantly, if you find this informative, please share this with your family and friends so they can become aware of how this CBOA director information, as well as the debt, as well as monetary policy, when it collides, how it can be very uncomfortable, because all you have to do is take a look around in various countries right now suffering monetary crises, and it all has to do with the government borrowing, central banks printing, commercial banks lending, and the people saving, which at the end of the day, that equation doesn't fare well for the public. So other than that, hope all is well. Look forward to bringing you more news. Tune in tonight for an RTD Live Talk. Let's talk about this.